Hello and welcome to the show. Today is May 21st, 2023. Let me start by saying that I'm not a financial advisor. This is not financial advice. This information is, of course, intended for entertainment and educational purposes only. Today we'll be talking about stock symbol MMTLP, or actually what used to be stock symbol MMTLP. That symbol is no longer trading. Instead, we have the private company shares Bridge Hydrocarbons. Okay. And a lot happened in the last week or so, and I will be going over a lot of that, though not everything, because there is a limited amount of time. What summarizes what MMTLP and Bridge Hydrocarbons is, or Bridge Hydrocarbons and MMTLP can best be summarized in this tweet that was put out by Copy and Paste William Morgan II. And if we look, it says MMTLP is a dividend placeholder. Bridge Hydrocarbons is a payment they still owe. Short sellers must pay out dividends. According to U.S. and international laws, this includes counterfeits. There are no exceptions to this. They owe us a dividend and must pay. Okay. If you are short in a stock, this means that you have sold shares without yet purchasing it. So if you've sold some shares without yet purchasing the shares, and you plan to purchase them at some point later on, and the company and the shareholders are owed a dividend, you as a short must pay that dividend to shareholders, right? No exceptions. You have to pay it. Simple, right? You have to pay all dividends up until you actually close your position. Okay, you have to pay all dividends up until you close the position. That is a fact. Now, Bridge Hydrocarbons is a dividend. It's a dividend of a private company share. This is the S1 filing of Bridge Hydrocarbons. Bridge Hydrocarbons shares never traded on any exchange. Let me repeat, Bridge Hydrocarbons never traded on any exchange. They were distributed directly to MMTLP shareholders via AST, the transfer agent, who distributed them out to brokers, and the brokers gave you your shares. Okay? So if we read the S1 filing, it states specifically that it is a distribution of 165 million shares. And a distribution and a dividend are the same thing. So Bridge Hydrocarbon shares are a dividend provided to MMTLP shareholders. If you don't believe that a distribution is a dividend, you can also look at the summary of the spinoff, where they talk about the conditions of the spinoff, and they state that there is a declared dividend of the common stock. So as a result, the distribution and the dividend are the same thing. Okay, it's very simple. So I've further elaborated on copy and paste tweet, of course, right? FINRA has an FAQ about the MMTLP situation. In their FAQ, they state that there is a short position in Bridge Hydrocarbons, but the stock never traded, right? The stock never traded. So nobody shorted Bridge Hydrocarbons directly. What happened is that MMTLP shareholders were to receive a dividend. If there is a short position, and that dividend, of course, was Bridge Hydrocarbons. If there is a short position in Bridge Hydrocarbons, that means that dividend was not distributed, right? It was not distributed to all shareholders. Some shareholders, 165 million of them, got them because they came directly through Bridge Hydrocarbons and were sent out to longs, shareholders, people who bought shares of MMTLP. They received the dividend of Bridge Hydrocarbons. However, what happens is that there are also shorts. People who've sold shares, yet but haven't purchased them yet. So those shorts have to provide this dividend of Bridge Hydrocarbons, a private company share. Yet they haven't provided it. How do I know they haven't provided it? Because there's a short position, right? If there was not a short position in Bridge Hydrocarbons, that means that the dividend was provided. But there is a short position. FINRA has stated that there is a short position according to their FAQ. They simply stated that, the short position in MMTLP has transferred to become a short position in Bridge Hydrocarbons. Bridge Hydrocarbons never traded. MMTLP traded, but Bridge Hydrocarbons never traded on any exchange. Okay? Never traded, ever. If there's a short position, that means that dividend was not paid to all shareholders, to all longs. Okay? We know for a fact that Metamaterials paid out the Bridge Hydrocarbons dividend to all MMTLP shareholders. 165 million Bridge Hydrocarbons shares were sent to AST. AST distributed them to the DTCC, who distributed them to brokers. Brokers distributed those shares to longs. However, brokers only received a net position. So if a broker had a short position, that short had to provide the dividend of Bridge Hydrocarbons to whoever purchased that share. Don't forget, a short position is when you've sold a share but not yet purchased it, therefore you owe a dividend. Okay, someone purchased that share. That someone is entitled to a dividend. Now, why is this a problem? This is a problem because brokers do not have enough shares to cover the longs because the shorts did not provide this dividend. Okay? The dividend has been paid out for over 160 days by Bridge Hydrocarbons. However, shorts have not paid out the dividend. The shorts are therefore in default. Okay? We know the shares are listed in our accounts. However, what's listed in our account, I believe, are placeholders and not actual shares. Why do I think they're placeholders? I believe that because brokers cannot decide who gets a share and who gets a share from a short, right? They can't. They're short. Brokers, by definition now, are short shares of Bridge Hydrocarbons. So FINRA's disclosure of the short position in MMTLP, right? Now we know at least some people have placeholders and some people have shares. Brokers cannot distinguish between a placeholder and a share. Therefore, everyone has placeholders, okay? Brokers also have shares. They have some shares, right? So they haven't, they can distribute some shares. They can distribute up to, in total 165 million shares have been distributed, and brokers have that split among all of their shareholders. But that does not include the shorts, okay? Now, are Bridge Hydrocarbons shares tradable? Now, according to FINRA says, according to the prospectus, NextBridge is an independent publicly reporting company and the shares are freely tradable under federal law. That's really curious, FINRA. This is the S-1 filing, which was approved by the SEC, who is FINRA's boss. FINRA reports to the SEC. If we read the S-1 filing, it says, the company will be an independent publicly reporting company. Well, that is true. Okay, that agrees with what FINRA said. However, the common stock is not and will not be publicly traded and will not be eligible for electronic transfer through the depository trust company, book entry system, or any other established clearing corporation. What does this mean? This means that the shares are not tradable. The shares are not and will not be publicly traded. FINRA apparently is unable to read the S-1 filing and understand when it says the common stock is not and will not be publicly traded. I suggest, FINRA, that you find an English teacher and get them to explain the words is not and will not be publicly traded. Now, they go on to say the shares are freely tradable under federal law, but they cannot be traded among brokers. That means that you have to get a share from AST, show it to somebody else, and say, hey, look, Mr. XYZ, would you like to buy my share? And you have to know Mr. XYZ and come up to him, and he has to say, yes, I might want to buy your share, but it's not going to be quoted. It's not going to be traded anywhere. It's not publicly tradable. They say freely tradable, but they don't say publicly tradable. There's a difference, okay? This is what I like to call, what's the word? Spin. Spin, okay? They note the word public reporting company. This implies that it's a publicly tradable company. Just because you can trade shares in a stock, that means I can trade shares with my friend Bob, whom I know, and I can sell Bob shares. However, I cannot list a share on the open market and say, hey, these shares are available. No. I can't do that. I can trade the shares with Bob if Bob is, for instance, an accredited investor. But to be a publicly tradable company, it's got to go through all this stuff with the DTCC and all that. A broker is not going to list a share if it's not DTC eligible. It ain't going to happen, dude. It ain't going to happen. Okay, this is what I call sophistry, and it's also what it's basically spin. It's spin. Okay. Let me move on. Okay. Now, I state in this tweet from a while back, and the tweet has to be updated, of course, that the short positions, if there are short positions in Bridge Hydrocarbons, which we know there are, the dividend for MMTLP was never paid and has not been paid for over 160 days. At the time I made this tweet, it was 150 days. It's now 160 plus days. It's actually 163 days. 163 days. So when do they have to pay? I don't know. When will they be in default? Right? When will they be in default? I don't know. So I asked ChatGBT. I said, hey, ChatGPT, if a short does not deliver a dividend, how much time does he or she have until he or she is in default? And I don't think ChatGPT knows because ChatGPT is acting awfully weaselly here. It says, a short seller does not have a specific time limit until they are considered in default. The duration of the short position is typically determined by the terms and conditions agreed upon by the short seller and the lender of the securities. This can vary, etc., etc. It is important to note that a short seller is expected to cover their short position by purchasing and returning the borrowed shares at some point. Shorts don't do that, by the way. ChatGPT is, very often it doesn't know what's going on and needs to be further asked questions. So I asked, hey, suppose you fail to deliver a dividend for 90 days. Then are you in default? ChatGPT says, well, if you fail to deliver a dividend within 90 days, that does not necessarily mean you're in default. Basically, ChatGPT is saying, I don't know. I don't know what the rules are. That's what ChatGPT is saying. So I didn't know what the rules were. I asked ChatGPT. ChatGPT says, I don't know what the rules are either. But it said further, being in default generally means failing to fulfill the contractual obligation. Then it goes on to saying, the consequences of default can vary depending upon the agreement and jurisdiction. This may include legal action, financial penalties, damage to the short seller's reputation. Short sellers have no reputation. Their reputation is damaged already. Okay. Or other measures intended to enforce compliance with the terms of the agreement. So I said, okay, ChatGPT, we know that you're being weaselly here. What about 160 days? Then are you in default? And ChatGPT says, well, if you fail to deliver within 160 days, it's unlikely to be a determining factor as to whether or not you're in default. Delivery of dividends is typically not tied directly to the time frame for covering a short position. Oh, okay. And then it repeats the stuff over and over and over again, right? Now, so I said, hey, look, yeah, I said 160 days already. Okay, what about, can you not deliver this indefinitely? All right? Who knows? Do you ever have to deliver the dividend? ChatGPT says, no, a short seller cannot fail to deliver a dividend indefinitely. Oh, so that you cannot fail to deliver it indefinitely. Thank you, ChatGPT. Dividends are typically distributed to shareholders who own the shares of the underlying stock, okay? Specific time frames for delivering dividends will depend on the terms and conditions. While the time frame for delivering dividends may vary, it is not indefinite. If a short seller consistently fails to deliver dividends within the agreed upon time frame, they may face penalties that are blah, blah, blah. ChatGPT says, I don't know, but it's definitely not infinite. Okay, ChatGPT. What is a reasonable time frame? How long do they have? Okay, come on, give me an answer. The specific time frame for delivering cannot be determined. Blah, blah, blah. ChatGPT says, I don't know. I can't tell you. But it is usually a few business days before the dividend record date, which is the date on which the dividend determines shareholders are entitled to receive the dividend. It is usually within a few days. Okay, we got something out of ChatGPT, right? It's usually within a few days. This is why ChatGPT is kind of like squirrely, okay? But it is usually within a few business days before the dividend record date, which means it should have happened in December. It should have happened way back in December, okay? Can they fail to deliver for a year, I said. Would that be okay? ChatGPT says, it is highly unlikely and generally not permissible for a short seller to fail to deliver dividends for an extended period such as a year. Failing to deliver dividends within a reasonable time frame could be considered breach of the short selling agreement or on regulatory requirements. Okay, finally. Okay. So it's not a year. It's probably not a year. Okay. Then I said, hey, look, suppose the dividend is a private company share and has not been delivered for 160 days. Then what? ChatGPT says, if the dividend in question is a private company share and it has not been delivered for 160 days, it will be highly unusual and may raise concerns about the fulfillment of contractual obligations. In the case of private company shares, the terms of the agreement between the short seller and the lender will define the time frame for delivering the shares as dividends. If the lender of the shares, blah, blah, blah. So again, it's going in Weasley's time frame saying, hey, I don't know. So ChatGPT is basically saying it doesn't know, okay? So I said, okay, let's get to the crux of this. I don't care about the lender, the short, anything. I don't care. I only just care about the broker, okay? If the broker is a lender, suppose the broker lent the shares. Is the broker on the hook? It says, if the broker is acting as a lender in a short selling transaction, they assume responsibility for ensuring the delivery of dividends or other benefits associated with the borrowed securities. Ha! The broker is on the hook, okay? As the lender, the broker is expected to have the mechanism in place to manage the lending process and monitor the borrower's compliance. Good to know. Now, we get to the crux of the question. Suppose the broker borrowed the shares for the short from somebody's margin account. This is likely what happened. And the short fails to deliver the private company shares. Now, is the broker on the hook? What happens? If the broker borrowed the shares for the short position from somebody's margin account and the short fails to deliver the private company shares, the broker is responsible for ensuring the fulfillment of the obligations as an intermediary in the transaction. The broker is freaking on the hook. Now we know what has happened, right? So, what happened is essentially that FINRA protected the shorts and they screwed over the brokers. The brokers are pissed at FINRA because now the brokers are responsible for delivering the dividend to the longs. The shorts, if they fail, they default to the broker, and that's a problem between the shorts and the shorts can go bankrupt. Who cares? Who gives a flying F? But the broker is responsible for delivering the dividend to you, and the broker hasn't delivered the dividend to you. We know this for a fact because they've been very squirrely. We know that there's a short position, okay? I would like to see an accounting from the broker. This is the crux of the matter. We want to see an accounting from the broker of where all the shares of Bridge Hydrocarbons are. This is why they cannot give the shares any value. This is why the shares are all zero value, because once the broker assumes responsibility, they're liable. That means that they've sold you a share that does not exist. They've sold you a share that is now a counterfeit share because they never got that share from the short. They got the shares from Bridge Hydrocarbons. Bridge Hydrocarbons fulfilled their obligations. The shorts did not, but the broker is held liable. Okay? And who screwed the broker over? It was FINRA. FINRA screwed the broker over to protect the shorts, and they made the situation look very complex to protect the broker from being screwed over, from having to deliver the shares. And they're saying it's very complex. It's not. It's a dividend that needs to be paid. 160 days late, they haven't done it. Simple. 160 plus days late, they haven't done it. Now, next thing that happened. Okay, last week, on Monday, thank you to, first off, I want to say a big thank you to John Brda for coming to the interview with Terry Younker, myself, and Gray S1, or S1 Gray, sorry. Gray is, of course, he's a Brit, and he's got the lovely British accent, and he asked a lot of really pertinent questions of John Brda. It's I highly recommend you check out this particular this particular Twitter space. Twitter spaces are, of course, they have a limited lifetime. So at some point, Twitter will automatically delete the space. But fortunately, Terry has recorded the space, and it's on his channel. And links are provided. Here's a link over here. Here's the link over here in Terry's space. I'll provide it in the description, of course. And you can always hear that particular interview. It is very enlightening, and it is worth listening to. John Brda answers questions, and it's definitely worth it. Okay, some key points there was another live space that happened later on in the week, and that happened with Anna Trades. So there's been a lot happening, right? This is a different live space, happened with Anna Trades and Mark Basile. Mark Basile is an attorney operating out of New York. He is not suing FINRA, by the way. He has asked courts to obtain blue sheets from FINRA, which they have, which is trading information, to determine who exactly to sue because of a wrong that has befallen his client, who is, of course, a Bridge Hydrocarbons shareholder. He doesn't know who to sue, but he knows the blue sheets are with FINRA, and those blue sheets will determine who needs to be sued. Interesting. So his take is very interesting. He's not suing FINRA. FINRA has no immunity on this. This is a New York state law that, if you know somebody who is the perpetrator of a law of damages, and you cannot hide that information from a lawyer who wants to sue somebody else, possibly yourself, who is the perpetrator of damages. You cannot hide that, right? It's like someone breaks a window, but you see who breaks it. You've recorded it, who broke this window on your video camera, but you tell people, hey, it's on my video camera. And so you should be, so the lawyer comes up to you and says, hey, look, I know you didn't break the window. I'm not suing you. I just want the information as to who broke the window. And then I can figure out who to sue, right? So he's just asking for information. New York state law says that you have to provide that information, by the way. So FINRA will have to provide the blue sheets. And this was a live space by Anna Trades. Check out her live space. It talks a little. Mark Basile's there. He discusses the situation. It's very worthwhile to listen to it. It's about 4 hours long, but Mark is there in the first part of it, so you don't have to listen to the full 4-hour live space, of course.
Yeah, so it seems like
sorry,
FINRA's gonna do an extension. I mean, it's just they're gonna opt for it anyway. It would, if you're on that side of it, just seems like something you would go for. What is the extension if so that happens?
Hey guys, I don't see the extension with this judge going more than 2 weeks. This judge is very time conscious on her calendar, and because this was brought by a court order and not just by a regular motion during a litigation, she'll probably keep the time constraints like very short if they do request an extension. I just got off the phone with John Brda while I was listening to this, and there's stuff happening behind the scenes with a different group of attorneys representing a different interest than I am, who FINRA has contacted about our petition. So I plan, after I get off this call, I'll be meeting with the MMTLP Arizona contingency in person, since I'm here in Arizona, at 11 o'clock today. And then I'm going to be calling the other attorney to see what that discussion was. And then I have to catch a flight back to New York. So I'm not going to chime in on any of the theories, except that, Huck, I may use the Schrodinger cat explanation in court a week from next Tuesday.
Okay, so that was that. I'm not going to go into that in detail. So that was just a clip from that particular Twitter space. I recommend you listen to that Twitter space. It's very good. Finally, there's another video that's out. It came out Friday, and it's an excellent video. It's got John Brda, of course, who's on the top left. It's got Wes Christian on the top. John Brda's in the top right. Wes Christian is in the top left. We have Mark Basile in the bottom left, and Roger James Hamilton in the bottom right. Okay. So Roger James Hamilton is interviewing all three, of course, and they're talking about the MMTLP situation.
Congress. I think about Tucker Anderson, who we're dealing with, who's an attorney for Congressman Pete Sessions. There's now 17 House offices on the MMTLP trail. They're going to be meeting with FINRA and ask questions. Now, where's that going to go? I don't know, but I applaud it, okay? So everybody on the MMTLP community, keep writing your congressman and keep it up. And everybody in the Reddit community, the Superstar, keep it up. Because the more people that jump on the train that we're on and expose it, the more people are going to see it's real, and that the people on the side of Wall Street are lying to them, okay? That's simple. And so that's piece 3. Piece 4 is...
Okay, that was the clip of Wes Christian. Now, so when are these 17 people, one of these 17 congresspeople going to be meeting with FINRA? We see a tweet from Anna Trades. Thank you, Anna Trades, for this tweet. Apparently, there are going to be a bunch of congresspeople meeting with FINRA on the 26th of May. Next Friday, They'll be meeting, and that should be pretty good. Okay, we see the House Financial Services Committee is having a meeting with FINRA next Friday. I suspect this has to do with, well, I'm hearing from the Wes Christensen video that MMTLP will be discussed there, but Anna is saying also, continue to call and email Congress, plead for a MMTLP representative to be invited. This is very important. John Brda, Bleed Blue, and Basile ESQ. So here's the thing. MMTLP may be discussed there. It looks like Anna wants MMTLP to be discussed there, but she'd also like a representative. And right now, everyone has basically agreed that we would like John Brda to be our representative because he knows the most about the situation. He is most eloquent, and he is able to speak to this matter. We would all very much appreciate if Congress would allow John Brda to be invited as an MMTLP representative. So, big shout out there. I hope this works out. I hope John Brda gets invited as a representative. That would be great for us as shareholders, because retail needs a voice to speak about the situation. And John Brda, quite frankly, is the most knowledgeable person about this situation. And I think it would be great if he was there. I think it would be wonderful if he's there. So that's happening next Friday. Okay, stuff is happening. I told you there's a lot happening. Mark Basile has also indicated in this same video that he would be meeting with FINRA around 4 p.m. on Friday to discuss release of the blue sheets. He's having a private meeting with FINRA because they got an extension for the blue sheets, of course, and Mark will be meeting with FINRA to discuss what's going to happen. I suspect, I do not know for sure, of course, this is all speculation on my part. Who knows? I suspect FINRA would be asking Mark, we don't want to release the blue sheets. What's it going to take for you to go away? And Mark's going to say, look, why don't you want to release the blue sheets? Well, we just want to know who's responsible for this issue that's hurt my, that's hurt my client here. Who was an MMTLP shareholder. You have the blue sheets. It doesn't cost you anything. And I think FINRA is going to try to find some way to try to not release the blue sheets. The only way that I could think of for FINRA to succeed in finding a way not to release the blue sheets is if the MMTLP situation was resolved before the blue sheets needed to be released. Okay? Could FINRA decide to release, to fix the MMTLP situation before the blue sheets need to be released, which is coming up soon? I suspect FINRA would rather do that. I suspect FINRA would rather pay whatever price needs to be paid to ensure that those blue sheets are kept secret. Because I think those blue sheets reveal a hell of a lot more about what the extent of the problem is, right? Personally, again, this is me personally, based upon statistics taken by Russ Race and whatnot, I believe that there's something in the range of 480 million short. I believe that there are 480 million shares out in the wild right now, which means there's about a short position of about 320 million shares. Okay, 165 million were issued, and I believe that the number of shares out in the wild held by longs is 480 million shares. That means that there's about 320 million short positions. I suspect FINRA would do whatever it takes to hide that from the public. Just imagine, twice as many shares might have been sold short than were actually issued. What would that do to the share price? And if FINRA knows that and they did nothing for 2 years, what does that mean? I don't think FINRA wants to release that info. I don't think so. They better solve that. Solve it before they need to release it. Who knows? I don't know. In either case, we have Brda Lady Rotor Pigeons, who's got a video out. And she's had asked for a FOIA request to release the blue sheets, to release the email that mentioned the blue sheets and the blue sheets if it's in the email. That FOIA request is still in progress. Check out Brda Lady's video. Check out her video. It's an excellent video. It's just out a few hours ago. It's cool. Find out what's going on. Again, I cannot cover everything possibly in this one video because there's so much stuff that's happening. Next. During the John Brda interview with myself and Terry Younker, at the end of it, we had Ollie from Trading Secrets, who happened to tweet this out. He said, by the way, next Bridge Hydrocarbons released its Form 10Q. This happened on Monday. See, again, a lot of stuff happened this week. There's a lot. I can't cover everything, but this is what I can cover. This is what I'll cover. Okay. The Form 10Q was released. Okay. In the Form 10Q, at the bottom of the Form 10Q, it says that there were, as of April 18th, 2023, there was a merger with Wolfbone. We know that. And there are 221,770 shares issued out of 500 million allocated. Wait, what's going on? I was told earlier that there was, I mentioned earlier that only 165 million shares were issued. Well, it turns out this is, the time frame of this is, as of May 5th, 2023, the outstanding stock was, the outstanding stock as of May 5th, just before May 5th, the number of outstanding stock was 165 million shares. But as of May 5th, the outstanding number of shares is 165 million shares. This is from the Form 10Q that ended March 31. Okay. However, if we look at the bottom of the 10Q, right, and we look at at item 2.01, the Wolfbone merger closing, it says following the confirmation of the merger. Okay, this is the merger with Wolfbone and Greg McCabe's interest in the Orogrande Basin. He has something like a 22.6249% working interest, which he exchanged for shares. He says the company expects, following the merger, the company expects to have 221,770 shares of its common stock issued and outstanding. This follows the consummation of the merger with Wolfbone. Okay. This is the subsequent. So this is subsequent to May 5th. This is on May 11th that this happened. On April 25th, 2023, the closing of the merger occurred on May 11th, 2023. As a result of the merger, the company acquired Wolfbone's 22.6249% remaining rights of working interest in the Orogrande project in consideration for issuance of 56 million shares. Okay, 56 million shares. This is a subsequent event to the 165 million shares being issued. Okay. Later on, if we look, it says, so we know 56 million shares were issued now to Mr. McCabe. There's an additional 27 million shares that were issued to these parties over here, all of these guys. Dingus Investments, Pandora, Kennedy Minerals, etc. 27 million shares were issued, but it was issued in exchange for 10.8751% working interest. What does this mean? This means more shares have been issued. If we add up all the shares that have been issued, we started with 165 million shares. 56 million was given to Mr. McCabe in exchange for 22% working interest. In addition to that, 27 million shares were provided to various Orogrande owners in exchange for 10.87% working interest. So in total, there have been 248 million shares now issued in exchange for, and Next Bridge Hydrocarbons now has 100% of the working interest. Let me repeat that. Next Bridge Hydrocarbons now has 100% of the working interest in the Orogrande project. That is a big deal. What does this mean? 100% of working interest. Okay. This is from the 10Q filing. There's a definition section up front. If we look under definitions, it states that we'll define all the terms that are used in this document. There are two key points. One term is royalty. This means an interest in an oil and gas lease that gives the owner of the interest the right to receive a portion of the production of the leased acreage. It does not require the owner to pay any portion of the cost of drilling or operating the wells. Royalties are either the landowner's royalties, which are reserved for the owner of the leased acreage at the time the lease is granted, or overriding royalties, which are usually reserved by the owner of the leaseholder in connection with a transfer to a subsequent owner. Okay. Basically, a royalty comes off the top. Okay. Working interest is also defined. Working interest is an interest in the oil and gas lease. Okay. I'm not going to go into that in detail, but it says basically let me go into it. Working interest means the interest in an oil and gas lease that gives the owner of the interest, the working interest, the right to drill for and produce oil and gas on the leased acreage, and requires the owner to pay a share of the costs for the drilling and production operations. The share of the production to which the working interest owner is entitled will always be smaller than the share of the cost that the working interest owner is required to bear, with the balance of the production accruing to the owners of the royalties. For example, the example actually clarifies things dramatically. For example, the owner of the 100% working interest in a lease burdened only with the landowner's royalty of 12.5% would be entitled to pay 100% of the costs of the well, but be entitled to retain 87.5% of the production. Basically, what this means is that royalty gets paid off the top, no matter what. The working interest pays for the drilling costs. Anything that's left after royalties, 100% of the working interest means that you get 100% of everything that is left after royalties. Okay? So, royalties come off the top. Anything that's left gets divided among the working interest owners. In this case, all of the working interest owners are Bridge Hydrocarbons. So, basically, that means that as Bridge Hydrocarbons has 100% of the working interest, we know what the royalties are off the top for Bridge Hydrocarbons. The royalties are 25% off the top. They go to University Lands, 20%, and the rest, the other 5%, has been accounted for. 25% goes off the top. That means that the rest of all the income that comes in from drilling the oil, okay, goes to the working interest shareholder, which is, of course, Bridge Hydrocarbons. The working interest shareholders pay for 100% of the cost of drilling. Right. The royalty owner does not have to pay for the cost of the drilling. Okay. So is this a good thing? Is this a bad thing? What's going on with this? Okay, we now know that 100% of the working interest is in the Orogrande project. Why do I care? Care because this is a big deal. It's a bigger deal than you or I may think, because there was something that I came up with a while back. There was actually a backdoor solution for shorts to get a hold of Bridge Hydrocarbons shares without buying a single share. Okay, that backdoor solution is that they could have acquired the working interest. And if they acquired the working interest, then Bridge Hydrocarbons could have swapped the working interest for shares. All of the working interest is sold now. It's all accounted for. Okay. Shorts could have bought a working interest in the Orogrande and exchanged it for Bridge Hydrocarbon shares from the company. They can't do that now. That back door is closed. There's only two places now shorts can get shares from. Two places. Bridge Hydrocarbons or Bridge Hydrocarbons shareholders. Those are the only two places they can get shares from. Sorry, shorts. This is a big deal. You may not have known that before. I didn't talk about it before because, quite frankly, I didn't want to talk about it before. I'm not going to tell them where they can go to get shares. Give me a break. But anyway, everyone who owns a piece of the Orogrande project, okay, would now rather have Bridge Hydrocarbon shares than having the working interest. Okay, that's a big deal also. Everyone who had a working interest, it wouldn't matter to them. They'd get the same amount of money, but now they've got Bridge Hydrocarbon shares, okay? So what does that mean? That means Bridge Hydrocarbons now has complete control of the oil and gas assets. They can decide when to drill. They don't need anyone's permission. They don't need to split the actual profits with anybody. It all goes to Bridge Hydrocarbons. Everything is simplified, okay? And that's the way it is, right? We now have 100% of the working interest owned by Bridge Hydrocarbons. If you want a piece of the Orogrande, basically, you buy Bridge Hydrocarbons shares. It's the only way to do it. Okay. So this is an interesting chart breakdown. If you want, take a screenshot of this. I think this is really interesting. 248 million shares after all of this is done. Okay. One further question I have. This is a question that I have. I don't know that there's an answer, but we see these guys. How are these shares going to be distributed to these various people? To these various entities, Dingus Investments, Pandora Energy. The reason I ask this question is because Bridge Hydrocarbon shares are not eligible for electronic funds transfer, right? Bridge Hydrocarbon shares are not eligible for electronic funds transfer, okay? So, are these shares going to be directly registered at AST? And I'm really curious about that because the reason I ask that question is, So the question is, are the shares going to be directly registered at AST? And can AST transfer the shares to brokers to be held in street name? Okay. You can imagine why I'm asking this question, right? The reason is because if the shares can be transferred from AST to brokerages and held in street name, it's no longer a one-way trip for shares to go from the broker to AST. If the shares can go from AST back to the broker, it's a big deal. Okay. How is this transfer going to take place? I'm genuinely curious. I do not have the answer. If anyone knows what the answer is, let me know. But it's a curious thing on my part. I have not transferred any shares to AST, but I would be curious if shares can be transferred from AST back to brokerages. Okay. Now, there is a further note in the 10Q filing. And you can read this if you like. It's basically the fact that management currently believes that the available resources may not provide sufficient funds for us to enable us to meet our financing and drilling obligations for 2023. I was asked this question a while back to say, hey, is NextBridge in trouble because they don't have any money? And they need money to drill shares, right? But NextBridge has basically said, look, we don't have enough money right now in the bank to drill for all the expenses we see coming up. Most of the expenses are drilling, right? They basically had got a couple people in an office, and that's next Bridge Hydrocarbons. Most of their expenses come from drilling and development, right? DDU, drilling and development. So they plan to they plan to drill and develop. They have no plans to sell and pump. They have no plans to sell and pump oil, right? They have no plans to sell oil. They have no plans to pump oil out of the ground and sell it. They do plan to develop the resources. That means that there's going to be additional drilling. And that also means that why are they doing the drilling? They want to discover if there's any more oil out there, right? Previously, we were told that there's somewhere between 2.7 to 5 billion barrels of oil. I just happened to have picked a 3.2 billion number because it was in the middle, but it could be as much as 5 billion for all we know. They found additional pay zones. Could they find more additional pay zones? How much oil is there out there? They could find a lot more oil. But anyway, so NextBridge is planning to develop the resource, meaning they're planning to find out if there's more oil out there. There could be. Okay, but they need money for drilling. And how are they going to raise this money for drilling? They plan on selling stock, taking loans, doing whatever it takes, right, to get this additional money. It's not that much money. It's not a big deal. But they plan to develop the resource. The plan is to sell the company to a major oil producer. The plan is not to pump oil and sell oil. Okay, that's what the plan is. Are they in trouble about needing money? I don't think so. I think they don't. Quite frankly, they just need to drill, 5 wells or something like that per year. It's not that bad. And there's a lot of people out there with a lot of money, and we're talking 3.2 billion barrels of oil that was in the ground as of a few years ago. There could be a lot more. Could there be 5 billion? I don't know. There's been a lot of stuff happening. That's the end of my video right now. These are my thoughts. I'm not a financial advisor, of course. This is not financial advice. This information is intended for entertainment and educational purposes only. Today is May 21st, 2023. And that's all I have to say for now. I'll probably make another video out later on because, again, I did not cover everything. There's too much stuff to go over. And, of course, I've already gone over a lot right now, and there'll be more happening. Next week should be very, very interesting. And if you have not provided your email to Bridge Hydrocarbons to be informed of what's going on, provide an email. They will let you know of 10Qs that are released. They will let you know if anything is happening in the future. And that's what I would do. Also, keep an eye on Twitter Spaces. Note that Twitter is full of rumor, innuendos, and stuff like that. And a lot of people don't know what's going on. A lot of people will speculate. Again, there's a lot of speculation out there as to what could happen, what may happen, who knows. But again, the actual information will come from Bridge Hydrocarbons, FINRA, and lawyers. Okay? And they will tell you what they are allowed to, of course, say and what is, I don't know anything more than what is out there in terms of the news as well, too. I just know what I've read in the 10Qs, same as everybody else. So therefore, Anything I say is, of course, pure speculation, and it's, of course, intended for entertainment and educational purposes only. Just letting you know. I'm feeling good. I'm feeling good about next week and the week after. I think it would be in FINRA's best interest to resolve the MMTLP situation before they have to release the blue sheets. Because if they have to release the blue sheets and that blue sheet information comes out, I think FINRA will have a host of other questions coming out there. There'll be a host of other questions if those blue sheets come out. Anyway, that's just my thoughts, is my opinion. Not financial advice, not a financial advisor. This information is, of course, intended for entertainment and educational purposes only. Goodbye.